Well, thanks all for staying around to hear the wrap-up speech. I'll try and keep it short and sweet. Legacy Minerals, we're a New South Wales-based exploration company, and we're really focused on targeting high-value discoveries. We're based, as I said, in New South Wales, predominantly in the Lachlan Fold Belt, and you can see that we've got a range of projects. So we've got quite an ambitious goal of drilling multiple projects, and I'll run through, the strategy and what that means for our shareholders and why we've taken this approach. But I'll just sort of set the context for New South Wales, a bit like Queensland. The East Coast of Australia has seen a huge underinvestment in exploration compared to WA. What's occurring now, particularly in New South Wales, is probably one of the hottest spots for greenfields exploration globally. So within the last 12 months, we've tracked over 210 million worth of joint ventures getting signed in New South Wales. We sort of kicked it off with Newmont, followed by Anglo Gold, and then Fortescue have also signed a JV recently. And one of the reasons why it's such an attractive place is because there's these lots of discoveries being made, and the size of the prize is big. So we're looking for porphyry epithermal systems or low sulfidation, and these generally host most of the world's gold. And Cadia Ridgeway is sort of the classic example of Australia's biggest gold mine and one of the world's best deposits, and that was acquired by Newmont from Newcrest last year. Importantly for us, we've got 4 drill campaigns that we've completed, one at Black Range. We're drilling currently at the moment with Newmont, and then we're also going to be drilling 2 more projects this year, one with S2 Resources. So that's Mark Bennett, Mark Creasy as major shareholders on an undercover porphyry target there, and following up on a magmatic nickel sulfide discovery that's been delivered by AI. A brief company overview. That's our IPO. We IPO'd in 2021 at the end, so just over 2 years, and market cap's around 30 mil, 105 million shares on issue, so we've kept a really tight capital structure. We really see ourselves as owners, not managers of the company, and the board are all significant shareholders in Legacy Minerals. You'll see our cash balance at the end of the first quarter at 3.2 mil, and we will wrap this quarter up at 3 mil in the bank. So we're very, very cautious in the way we spend, and part of the reason why we can conduct such aggressive and active exploration programs is this partnership model that we have. So we can not only afford to drill and progress our own projects, but we can afford to drill and progress other projects using that sort of hybrid funding model. Led by quite an experienced board and management team. Both Matthew and David are here in the audience. And I'll sort of just note the technical directors, Doug and Tom. Doug's also leading the charge with Inflection Gold for some big undercover porphyry exploration in New South Wales, signing on Anglo with that project. So in terms of, the value proposition, what makes Legacy a little bit different to your traditional explorers is this hybrid discovery approach that we take. So we don't have a single project, we don't do flagships, and the reason why is that we like to think of discovery opportunities. You want to give yourselves as much exposure to as many discoveries as you can, and targeting those discovery catalysts as share price growth. So we've got 6 100% owned projects. They give our shareholders that direct upside. And they're our largest projects in our portfolio. Our most recent acquisition alone is a belt scale opportunity that's greater than 5,500 square kilometres. Our joint venture partnerships, we think we've got some fantastic partners there with Newmont and S2R. Newmont, for example, when they signed on with us last year, within the last 3 years in Australia, they've done 2 deals, which is Legacy and Newcrest. So they don't come out often, and what they're looking for when they're looking for a tier 1 type deposit is 500,000 ounces, 10-year mine life. So that's the sort of the scale of the systems that these guys are looking for, and that's certainly what New South Wales has produced. If people recall Cadia East, I think in that first year or two of production, that was 700,000 ounces gold that came out of that. Importantly, with those joint ventures, it's not just about seeing the discovery. There's some very good terms of that see Legacy retain 20% ownership through to commercial production. So we've secured financing arrangements as part of the deals with S2 and Newmont, where they'll finance our 20% ownership, and we have to repay that out of commercial operation. So we see the discovery upside, they pay for the resource drill out studies, and the capex to put it into production. Ultimately, that really means multiple discovery exposures. So we present both a great near-term investment proposition for shareholders and retail buyers, as well as a longer-term investment proposition that are looking for those future mines that might come out of our portfolio. I've put this slide up a couple of times before, and it just to really demonstrate, the value in buying a stake in a company that has a shareholder with a major. And there's a few great examples globally, but probably a close to home one is over in WA and Greatland Gold. So 30% ownership of a project with Newcrest. That 30% ownership saw their market cap increase from 100 mil to 1.7 bill through that aggressive discovery period. So there's significant upside that you can sort of get through that. Importantly, what we like to look at, when making a comparison to that discovery journey, is that you look at the Lassonde curve and where they're at the moment in that debt facility period. $300 million they've had to sort of try and put away to match their share with now Newmont. When you look at our JVs, there's no debt that we need to enter into that's at risk for our shareholders, because again, we don't have to repay anything until the mine is commercially producing cash flow. So I'll talk about Ballura, just because that's the project that we're currently drilling at the moment. We pegged this as free ground about 3 years ago, and what we've really discovered there is an extensive epithermal vein field. So we're talking roughly 27 square kilometres of epithermal veining. It's a very early stage project, and if you were to think, what's Newmont doing in an extremely greenfields project? When we started it, there was probably about 3,000 metres of drilling. We've now bumped that up to 7 or 8. But it's really the surface expression of what we think to be a massive preserved epithermal system. So when we're talking about veins at surface, 3 metres wide, that strike for kilometres and grading up to 60 grams gold in rock chips and about 1,000 grams silver, with very limited drill testing, you're talking about a really big system. And the bigger these sort of systems are, with these types of extensive geochemical signatures at surface, I guess the probability decreases that you're not going to host a world-class deposit. And when you start to look at the vein textures, look at the mineralogy, and compare it to a lot of the South American examples of major epithermal producing systems, it really looks like the goods. So we're aggressively exploring there at the moment with Newmont. We've wrapped up, or soon to wrap up, a second drill campaign and start to expect results from that shortly. So I'll talk about Black Range. Black Range and Ballura have a close relationship because they're essentially the same age systems. So when we sort of realised that Newmont and Ballura was going to be something special, we went out and looked around for New South Wales to pick up another one, and we pegged Black Range as free ground last year. The last company that was on ground there was Newcrest 30 years ago. So when we look at projects, we like to look for that untested opportunity. Newcrest walked off it in 1992, and that was the real kickoff of the Cadia discovery. So no one had been back there since. We've been out there applying modern geochemistry. We'll look to do some modern geophysics. And importantly, the size of this system, it's about 3 times the package that we're looking at Ballura. So we've got an epithermal strike occurrences. That's just in the northern half of the tenement. That's about 30 kilometres. We've been drilling and focused at Sugarbag Hill, and we wrapped up a campaign recently there. And that's been a compelling target, again, because before Newcrest left, they dated Black Range and they determined that the mineralisation age is the same as Ballura. So we've got these 2 massive systems in New South Wales, previously unrecognised. From an epithermal perspective, we're looking at what we consider to be the top of the system, and that's demonstrated in this sinter lithology that we're mapping. And that's really important because these are the wrong-aged rocks. Most of these systems are found in Indonesia, New Zealand, PNG. We've got very recent active systems. So you're talking anything from a couple 100,000 years to a couple million. We're looking at a system here that's around 400, 420. So it places it as these 2 projects as potentially some of the world's oldest preserved epithermal systems. So a little bit older than some of the stuff up in Queensland in the Drummond. So some sort of very unique event has occurred that's preserved these, and it's also meant that people in New South Wales have never had an active exploration model down there. So onto our sort of our more undercover conceptual sort of targets. Glen Logan. So this is located about 50k south of Cowra. We picked this project up at the end of last year, And within 3 months, we got a deal done with S2 Resources. I think people that would be familiar with probably the first iteration of S2, which was Sirius. We're really happy that we've got a credible exploration team and a serially successful explorer like Mark Bennett that's backing our ideas and willing to put his money behind the project. When we picked this up, we thought that the target depth here was going to be about 800 metres. Rio Tinto identified it back in 1994, sort of pre the idea of block caving being a viable commercial production method or in its infancy, and they walked away due to the economics of that. Modern technology in terms of the magnetic inversion modelling brings that target a lot closer to surface. So we think it's more like 450 to 550 metres from surface. Importantly, it sits in the same age rock that hosts Cadia, which is the Ordovician. It's got the same cover sequence that sits above Cadia East, which is the Silurian. And there's a big deep drill hole that was placed next to this target there's a major offsetting fault, and that never left a younger geological unit, which is the Devonian. So it really has remained untested. It's quite a discrete body. It's about 2.5% magnetism. It plunges for about a kilometre and a half deep, and it's about 600 metres wide. So it's all the hallmarks you want to see for a classic sort of porphyry signature, and you can sort of see the zones of intense, what we interpret to be magnetite destruction around it. Importantly, those shallow drill holes at surface, they got no grade, and you'd expect that, in the Byrne cover sequence. But at two of the holes, they intercepted Byrne monzondiorites in the Silurian, and that's important because above Boda East, you see Byrne monzondiorites in the Silurian because you've had such a prolonged porphyry intrusive that's come through that even as new geology's started to deposit on top, it's still active in pushing up these intrusives into the newer geology. That's just a bit of a snapshot of what they look like out there in the market. And it's sort of something that, again, are being aggressively explored for in New South Wales at the moment. So Anglo Gold with some recent deals, Fortescue with Magmatic, and some great success recently with Peter Durden and Waratah in terms of looking for an epithermal system just outside Cadia. So it's an exciting sort of discovery opportunity. Thompson is another project. This one we paid for, so we've had to pay for two projects in our portfolio. And what we really saw here was not just one bullseye magnetic target, but more than a dozen. So if we thought there was such interest in drilling, these undercover porphyries, we're not big on it because we like the low sulfidation. It's easy to get gold at surface, and your drill targets start from 0 metres. But we saw up here a real district scale opportunity. So this licence is more than double our entire portfolio in itself. It floated a company, Thompson Resources, about 10, 12 years ago, and they got some very interesting hits. But within about a year, they got essentially fatigued with that undercover exploration story. And what we saw in some of that drilling, large alteration zones, they got mineralisation that we think to be distal to these, what we're interpreting to be either intrusion-related gold systems, which again, the geological development and understanding of these systems is relatively new, or potentially IOCGs. So we see it as a great opportunity, and we've got, again, a good track record of being able to secure joint venture fundings to sort of test the models and the ideas. But the depth of the cover up here, we're only looking about, it starts from 0 to 280 metres, so it's relatively shallow in that regard. So Drake, we picked up off the company called White Rock Resources. So we really like Drake because when we went on the hunt in New South Wales for these other, low sulfidation epithermal systems, Drake came across our radar. And what we really liked about it, the more we looked into it, is the copper story that hasn't been told up there. So you're talking about extensive copper oxide across several kilometres. You've got lots of smoke that there's a big porphyry driving this system, and that's seeing in the mapping as well as the porphyry D veins that have been intercepted in drilling. And what we're really doing differently to, I guess, the last 40 years of work up there is not focusing on the production and the mining and focusing on the exploration. We've got a caldera that's about 150 square kilometres, so it's as big or akin to the size that you'd see in like your Porgera and your big sort of PNG style systems. We purchased it for $190,000. We think that there's 20 to 30 million that's been spent on that project. It does have a resource across the 2 granted licences and a pending licence application of 320,000 ounces gold, 23 million ounces silver. But again, our focus is not on that mining side. We're looking for big scale systems up here. And this really is the slide that sort of encapsulates, I guess, what got us in there in the first place and what really sort of made us hunt this down. We published those drill hole results a couple of weeks ago. It was sort of amazing, never been put to the market before, but 12 metres at 48 grams gold and 2,500 silver, including 6 at 82 and 3,500 grams. That's from 12 metres, and in that 12 metre interval, there's 3.7 metres of core loss. So including a high-grade zone of 0.9 metres at 230 grams gold and 9,000 grams silver. We're pretty confident that if you didn't have a security guard on the drill rig pulling that core out, that would explain your core loss there. Visible gold, visible silver across the system, extensively mineralised. So we see a lot of upside in this project for the copper. It's never been explored as a polymetallic system. And so when you look at copper hits 16 metres at 5.8% from 58 and 10 at 7 in the same drill hole, not in the resource, you think they're cracking economic grades. Again, significant gold grades, 118 metres at 1.7, 8 at 16, and a lot of those great hits and a lot of the drilling there has not been brought into the resource. So running through it quickly, we're going to apply that systematic work, focus on the copper, I guess, go to the grassroots exploration approach that we've been successful at Ballura, and really work on digitising the data, mapping it, and really taking potentially a bit of a machine learning approach up there as well, just because of the wealth of data that sort of exists in the roughly 100,000 metres of drilling. And a lot of that, will result in us doing some deeper drilling, as most of that 100,000 metres is less than, there's 70,000 metres that is less than 50 metres deep, so very shallow. Lastly, Fontenoy. We've got an AI group there. We'll be drilling this project shortly as well, but they made a discovery of a magmatic nickel-copper sulfide system. And that's the first proven discovery and drilling of a system of this style in New South Wales. So quite a unique position to be able to point to a direct greenfields discovery that has resulted from AI deployment. So they're coming on our ground, they drill it for us, and if they're successful in getting a discovery hit, then they can earn a royalty. So they're working towards earning that potential royalty with some more drilling. So that sort of wraps it up. Multiple share price catalysts over the coming months, and that's seen a big sort of rise in our share price. Off the back of some pretty significant discoveries in New South Wales too. We've got a strong register, tight capital structure. We've got projects getting backed by some serious successful mining companies and explorers. And importantly, we've got a very clear value to deliver, for our shareholders. So we're very focused on our discovery approach, and improve, our use of capital. We think it's a great time to be exploring in New South Wales. So thank you.
Thank you, Chris. Some impressive numbers there. Any questions for Chris? No? Do you want to tell us a bit more about some of your other projects?
Yeah, I guess
a few minutes.
We had a few more, but what?
No, it's too much. Just tell me which one's going to send it up 10 times.
We got at least 4 that can do that.
I know that, so just tell me. I don't care which order.
Well, we don't.
Ballura, Black Range, Glen Logan. Yeah.
We don't have favourite.
Who knows? We're going to let the drill rod has to test it. So, Glen Logan's going to be a very binary outcome. So I'd be looking at that when we start to announce that drilling occurring. That's going to be imminently. Like that needs to get done before the end of the year as part of the JV terms with Mark. That's copper and gold. So that's the Katie Ridgeway. So 1 or 2 drill holes into that body, and if that's grading any sort of, you can talk about that magnetic body itself is about 1.2 billion tonnes. If it's got any copper in it, that's a game changer. So that's one to look out for. Ballura.
Just a question over here.
Chris, excellent portfolio. The other projects you've got, how are you looking at JVing those?
Yeah, like we bring on projects, we divest projects and joint ventures. So yeah, that'll be active, probably a couple at least imminently as well. So yeah, we're looking as we shift towards these larger system sizes. Our projects that sort of sit Cobar type or orogenic shear hosted stuff. We sort of we'll look to sort of move them and find the right home for them.
You've got projects in Cobar.
Yes, yeah. we're downstrike from CSA out there. But again, they're not the sort of size of the system that we're looking. What's that?
Anything to say about them?
We've been active out there. There might be something happening on that front, hopefully. I can't say much.
We've just got one question up here first.
Which is going to be your expectation? Which will be the earliest cash flow?
Well, yeah, Drake, just because it's more advanced. But again, the value is in the discovery, for us, rather than looking at putting something into production.
Okay.
Just quickly, where are you spending most of the money?
Yeah, it's been at Black Range, but it'll shift up towards Drake as we start to go up there and do some pretty large-scale geophysical, geochemical surveys.
And how much are you spending per year?
Per year. I think we'll probably spend about 7 or 8 million in exploration this year, and we'll probably be able to do that within our existing budget because, again, like that joint venture funding model does make our quarterlies look funny because we don't raise capital, but, we're getting a lot of work done. So, yeah, I think about 7 or 8 we're planning.
Okay, any final questions for Chris? No. Okay, thank you so much. Thank you to Chris.
All right, thank you.